In this video, traders are going to look at will they shut down the markets and what could happen if they do. Stay tuned. Hey traders, warm welcome to you. Alright, so I can't believe I'm even filming this video. Market volatility is crazy. We're in the middle of March here and I'm filming this. Who knows when you're watching this? I hope from the sake of humanity that we come out of this coronavirus issue. But keeping on topic with trading, what would happen if the governments, US government, UK government, whoever it may be, decide to shut down the markets? Would they do it? And what would happen to your positions, your trading, all this kind of stuff? Okay, so as I'm speaking now, I know that early this morning, Philippines, I believe the Philippines has shut down their stock exchange, first country to do so. We also have had a statement from the White House saying that that's not being considered. However, reduced trading hours are being considered. But hey, you know, this situation changes hourly depending on how this coronavirus is spreading. There's so many variables into this that what's said now could be completely different tomorrow. So let's keep our minds open. Let's prepare for this. One of the things that I've definitely got thought about, and I've thought about various different ways that this could play out. And again, I'll definitely do a video on that coming up. But one of the things is, if they shut the markets, what happens? So the thing is, will they shut the markets? So let's look at the pros and cons of this. Okay, if the selling is constant, then I think that Donald Trump could say, hey, how can we stop this? We have injected so much money, we have cut interest rates, where do we go from here? All these stimulus plans aren't working. If the market is still getting pounded, there may be a case for shutting the markets. It's like, listen, we don't keep them open. Shut them until this has passed, because people are trading from a perspective of fear. Now, on one side, that doesn't sit well with me, because I think price discovery and free market is what it's all about. But on the other side, I understand why they're doing that. You know, if people are forced liquidating, and if the other thing as well is if people are, you know, concentrating on monetary loss, are they focused on health? Are they focused on other things? You know, there's one thing to say that, hey, this is a big crisis, just shut everything down, stop where we are, focus our efforts on getting out of it, focus our efforts on the health side of things, on innovation to kind of get through this, and then reopen the markets. So those are the two things. So would they do it? I think it's possible they could do it. There could be some justification for it. Will they do it? I think it's got to be pretty serious for that. I think we've got to be, you know, in complete meltdown, like literally hitting, you know, the circuit breakers, maybe the 20% one, and then 2 days in a row. That kind of thing would maybe warrant them going, right, we're shutting the markets for a time being, just to see what's going on. It's been done before, of course, for a short period of time, but whether they do it for a longer period of time, who knows, guys? We're just in unprecedented territory now. Okay, so what happens if they do shut the markets? And we've kind of said, would they shut the markets? And those are my thoughts on that. You have to let me know in the comment section below, guys, what you think. You think it'll be shut? You think they carry on? I think it's a possibility. Obviously, I hope not, but if it's to protect things, then I understand where they're coming from. Anyway, what would happen? So obviously, for traders, that's it. You know, can't trade anything. It's not going to be open. We're not going to execute orders. If it's not open, we can't trade. So if you're a day trader, if you're a swing trader, that's it, game over. But from an execution perspective, however, it would be an absolutely perfect time to work on every other aspect of your trading, you know, your trading plan, your mindset, your discipline. It would almost be a good thing for many traders after this extreme volatility to be able to reset for a while and not be concerned about missing moves or positions or all this stuff, or focused or having mental energy on that. Just be able to purely focus on, you know, becoming a better trader, with all of the things that have to happen, and your game plan after the market's open, reviewing things. I think it wouldn't be a bad thing. It wouldn't be a bad thing to put the brakes on everybody for a moment. Anyway, what happens if you've got a position? The big question is, okay, got a position, what happens? Well, I don't know the answer to that, guys. My guess is that literally that's it, the market's closed. If you've got a position, whatever the price is when it reopens, then that's the name of the game, just as if it was a gap overnight on a stock. So it's something to be mindful of if you're trading, holding stuff over multiple days. It's something to consider that when you can't trade, you can't control the risk. So bear in mind, you do have open-ended risk when the markets are closed. Just like I've said before, when we're swing trading for swing trading a stock overnight, or we're swing trading over the weekend, any asset, we have the risk that we can't control because we can't enter or exit the market. You know, a stop isn't going to help you if the market's closed, opens again in 2 months' time, and the whole thing gaps down 90%. However, that being said, I don't know if they would open the markets again if we were in a complete catastrophe. So it doesn't make any sense. The reason to close the markets would be to prevent any more heavy selling and damage to pension, all this kind of stuff, which is not good, real heavy selling, like, you know, we're taking 80% off the highs. That just doesn't do anybody any good. Volatility is great for traders. We like a bit of spice, but no one really wants to see, you know, companies just completely being smashed and assets being devalued by 80%. And it doesn't make sense for anybody. So that would be why they do it. So my theory, perhaps, again, rightly or wrongly, I do not know, guys, would be that they wouldn't plan to reopen the markets until things were looking a lot better. Now, unless they were forced to for some reason, unless for, you know, we couldn't clear out the virus, or it just got worse and they had to kind of, people were demanding that they could come back in and trade stuff, and then maybe they would. But I think they would hope to shut the markets down to quash the panic a little bit, and then reopen them on the other side of things when we had more clarity and what have you, and, you know, we get a gap up and we get a rally on. So I definitely would not want to be holding any shorts. Definitely not want to be holding shorts, guys, during a market that's closed. I don't know if I want to be holding longs, but if you're an investor, I can understand that that wouldn't perhaps concern you as much as being a trader holding leverage short, because of course, you know, unlimited loss, especially if you're selling options as well, all that kind of stuff. How would options work as well? Again, I don't know. If the market was closed and you had an option, you know, what happened during the expiry period of that? Would the trade be reversed? Would it expire as it is now and the ones expire worthless? Would the strike just be as it is at the close? Again, I don't know the answers to that, guys. It would be interesting to kind of maybe go back and dig around if you're an options trader and find out exactly what would happen if that was the case. So summary is, could they close the markets? Yes, they could. Do I think they'll close the markets? I don't think they do, but yeah, who knows? The situation is changing hour by hour, day by day. The whole situation could swing one way, and it could be very, very feasible kind of thing. The risk to us is, of course, holding the positions, and we have the markets closed and not being able to exit the positions, and that kind of stuff. Now, would we be on the hook for a loss if we were in positions and they close the markets? Yes, majority of people would. If you're in the UK, you're trading through a CFD broker or a spread betting broker as a retail trader. They classify retail and professional. Retail traders, again, this could change, guys, but retail traders have negative balance protection. So as it stands now, I can assume, I don't know, I could assume that would still apply. Is there a force majeure contract clause in there? Again, who knows, guys, but we are in uncharted territory. But you maybe could assume that, but end of the day, you wouldn't probably want to be holding anything from a trading perspective during a shutdown, because you'd be worried about it. Investing slightly different, because you've got a longer term view on it, and you probably feel more comfortable holding it. So anyway, guys, that's my thoughts on that. Let me know your thoughts in the comment section below. Do you think they're going to shut down? Do you think it's possible? What do you think would happen if we shut down? Let me know your thoughts. You guys know as much as me with this one. These are just my thoughts on this, and I appreciate you taking the time to, you know, be here, watch the video. We're all going through this together. Let's see what happens. Take care out there. Bye bye.